I am AI Avatar of CA Ratan Mundra. In this session, we will undertake a structured impact analysis of the public comments received on the draft regulatory framework issued by the International Financial Services Centres Authority concerning the registration of factors and assignment of receivables in IFSC. We will examine proposed modifications, identify material changes, compare them with the draft provisions, and evaluate strategic, operational, compliance, and ecosystem level implications for IFSC. The draft framework seeks to formalize registration of factors operating in IFSC and regulate assignment of receivables through structured registry mechanisms. The objective is to enhance transparency, improve priority clarity, and reduce disputes in receivable financing transactions. Public comments indicate areas where the ecosystem seeks greater flexibility, parity, and global alignment. Under the draft framework, banks were positioned with certain advantages in operational treatment. Stakeholders have proposed that RBI-licensed NBFC factors should receive equivalent treatment, as they are also prudentially regulated entities. If accepted, this represents a structural shift toward competitive neutrality within IFSC. Granting parity would expand the eligible factoring base in IFSC and deepen liquidity in receivables financing. However, supervisory calibration may be required because risk profiles of banks and NBFCs differ. Strategically, this could strengthen IFSC's positioning as an inclusive trade finance jurisdiction. The draft regulation references TREDS platforms, which primarily facilitate domestic trade receivables. Public comments recommend replacing or supplementing TREDS with ITFS platforms to include international and export receivables. This recommendation reflects IFSC's global trade mandate. Including ITFS expands the framework from domestic trade financing to international receivables assignment. This materially strengthens IFSC's competitiveness against global trade finance hubs. It also enhances export factoring and cross-border receivable securitization potential. The draft structure appears platform-dependent, requiring filings through TREDS. Stakeholders propose that licensed factors and banks be permitted to directly register assignments with the central registry, either at whole turnover or invoice level. This proposal introduces a hybrid registration model. Direct filing enhances operational flexibility and allows selective invoice-level assignments. It improves legal certainty regarding priority of claims in receivables. However, it increases compliance responsibility for individual factors. Stakeholders suggested explicitly allowing registration at invoice level in addition to whole turnover transactions. This clarity prevents interpretational disputes and promotes structured financing models. It is particularly beneficial for SMEs and fintech-enabled factoring. A clarification was suggested to include IFSC banking units in the exclusion category where appropriate. The objective is to avoid duplicative regulatory requirements for branch structures of banks. This reduces compliance friction without diluting oversight. A key operational concern relates to delay charges for late registration by platforms. Stakeholders propose that such charges should be borne by the platform responsible, not by banks or factors. This enhances accountability architecture within the ecosystem. One comment raises concern regarding repeal of earlier guidelines on factoring and forfeiting. If repealed without replacement clarity, regulatory vacuum risks may arise. IFSCA will need to ensure seamless transition to avoid interpretational ambiguity. Several suggestions constitute material structural shifts. These include NBFC parity, ITFS inclusion, and direct registry filing. Others provide operational clarity and compliance simplification. If accepted, these changes collectively strengthen IFSC's trade finance ecosystem. They promote competitive neutrality, deepen export receivable financing, and reduce regulatory arbitrage. Most importantly, they align the framework with global best practices. The draft regulations represent an important step toward formalizing receivables registration in IFSC. The public comments largely move toward liberalization, flexibility, and global integration while maintaining risk-balanced oversight. The final framework will significantly influence the evolution of IFSC's receivables financing ecosystem. Moonses and Management Consultants LLP, a trusted partner for CES and IFSC excellence. A pioneer in establishing CES and IFSC units within GIFT City and India, delivering end-to-end IFSC setup. Operational support and handling complaints, risk management renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BATF, and ancillary regulations, and fintech expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.